The growing interest, adoption, and investment in cryptocurrency, also called crypto for short, has many investors curious about getting into the game. This beginner's guide will define cryptocurrency as an asset class and take you through the basics of investing in it. Learn what crypto is, the different types, what to consider before investing, and details to help you determine if it has a place in your portfolio. And if you decide you're ready to start investing in crypto, you'll find a step-by-step guide to getting started. Alright, without any further do's, let's get to it. So what is cryptocurrency? Cryptocurrency is a virtual currency that, like cash, is a source of purchasing power. It's also an avenue for investment and, like other investment assets, can be bought with the objective of financial return. That being said, cryptocurrency is one of the most volatile, meaning it has large price swings, asset classes. It's impossible to predict the future, but it seems clear that crypto and the underlying technologies will be more ubiquitous. Unlike most forms of currency, cryptocurrencies are decentralized, meaning they are not issued, backed, or regulated by a central authority like the US government. Also known as distributed ledger technology, blockchain produces a secure encrypted record of the value of each virtual coin and its associated transactions. Those records are distributed and linked across the network of parties, or computers, accessing the blockchain. In theory, the blockchain can be accessed by anyone with an internet connection. This system was designed with security, transparency, speed, and accuracy in mind. Now let's talk about the different types of cryptocurrencies. While the word cryptocurrency itself is a generic term for virtual currencies using blockchain technology, there are many different types, around 23,000 as of June 2023, according to CoinMarketCap.com. Bitcoin was one of the earliest cryptocurrencies created and remains the best known. Collectively, all other coin-based cryptocurrencies are called altcoin, or alternative to Bitcoin. Now let's discuss if cryptocurrency is actually a good investment. Well, whether crypto will be a good investment for you depends on many factors. As with all investing, the answer comes down to things like your tolerance for risk, both in financial terms and in psychological terms, and your time horizon, as well as how diversified your portfolio is. Simply because an asset is available to trade does not necessarily mean that it's the right investment for your situation. And as discussed above, all investing carries the risk that you could lose money. Another question that comes around a lot is, how much should you invest in cryptocurrency? Some experts recommend investing no more than 1% to 5% of your net worth. This rule goes for investing in general, not just in cryptos. When looking at how much of your portfolio to invest in crypto, Feldman suggests that limiting your overall exposure to crypto is crucial, and it's important to never invest more than you could afford to lose. While having a small exposure to crypto may improve the risk-adjusted return profile of a diversified portfolio, the overall amount that one should invest in crypto should be dictated by your overall investment portfolio and your risk tolerance. With that in mind, diversification within crypto is another aspect to consider. While the whole crypto market tends to be extremely volatile, there is potentially less risk in the larger, more liquid cryptos as compared to the smaller cap, more speculative cryptocurrencies. Although even the largest, most established cryptos exhibit large price swings. Thus, you should consider the mix of cryptos you own in addition to the overall amount of crypto in your portfolio. Alright guys, I am proud of you still sticking around. With that been said, now let's discuss some pros of investing in cryptocurrency. Prior to 2022, the price of cryptocurrencies were not highly correlated to other investment classes, like stocks and bonds, so having a small exposure to this potentially high growth space may improve risk-adjusted returns. While correlations between cryptocurrencies and other asset classes were high in 2022, it's unclear if this is a new trend. Some experts compare certain cryptos, such as Bitcoin, to gold. Both are fungible and durable because they're hard to destroy, scarce due to finite supply, and their purchasing power is not defined by any central authority. Thanks to the decentralization and transparency of the distributed ledger, it's difficult to compromise the network integrity behind cryptocurrencies. On the other hand, there are some cons of investing in cryptocurrency. The cryptocurrency market is highly volatile. It can be difficult to predict when values will rise or fall, and the drivers of large swings in value may not always be clear. Cryptocurrencies are not currently subject to much government regulation, so transactions don't come with legal protection, unlike traditional investments like stocks. Our next topic to discuss is how to invest in cryptocurrency in 2023. Crypto investing is becoming more accessible every day. A number of exchanges, similar to those used for traditional investments, are available. You can set up an account in minutes. But, just like investing in any asset, doing your research on a particular currency prior to investing may be wise. If you're wondering how to invest in cryptocurrency for the first time, the following 5 steps can get you started. Step 1. Choose what cryptocurrency to invest in. In the same way that you'd evaluate the potential risks and financial health of a company before buying its stock, you'll want to understand and carefully evaluate the different, unique characteristics of each cryptocurrency you're considering for investment. Those risks might leave you wondering how to invest in cryptocurrency without falling victim to a scam. As a rule of thumb, in order to avoid pump and dump schemes, you should not invest in smaller, newer cryptos that are being heavily promoted on social media platforms. Remember that it's your responsibility to analyze the investment risk of a given cryptocurrency and that social media experts may not have your best interests in mind. Although you may be able to minimize your exposure to fraud and cybersecurity risk by investing through a large, reputable platform, because the whole industry isn't regulated, it's impossible to eliminate this risk. Alright guys, now let's hear is step 2. Select a cryptocurrency exchange. Cryptocurrency must be bought through an exchange or investment platform, such as Coinbase. Some factors you may wish to consider when selecting an exchange are security, fees, the volume of trading, minimum investment requirements, and the types of cryptocurrencies available for purchase on a given exchange. Step 3. Consider storage and digital wallet options. Crypto is entirely digital, so you need a digital place to store the coins you owe. One option, according to Feldman, is your investment platform. As the cryptocurrency market has developed, most newer participants choose to store their cryptocurrency investments with the investment platform they're using, Feldman explains. Make sure you choose a platform that will be responsible for custody and safekeeping of your assets. That type of platform will be regulated, well protected against hacking and cyber threats, and carry lots of financial insurance. I will leave a link below for some well-trusted crypto exchanges. If you choose not to hold your cryptocurrency on the more popular platforms, you'll need a crypto wallet. These hold the private keys that allow you to access your crypto by unlocking the digital identity that is associated with your ownership, recorded on the blockchain. You can opt for either a hot or cold digital wallet. A hot wallet is accessible via the internet and generally more convenient. A cold wallet is a physical storage device, much like a USB drive, that keeps your cryptocurrency keys completely offline and generally more secure. Step 4. Decide how much to invest. Just like any investment, the amount you choose to put into crypto will depend on many factors, such as your budget, risk tolerance, and investing strategy. You'll also want to consider any minimum investment requirements and transaction costs, which vary across crypto exchanges. If you want to invest in a cryptocurrency with a high value per coin, most exchanges allow you to invest on a dollar basis, rather than buying a whole coin, so you don't have to come up with tens of thousands of dollars to invest in Bitcoin, for example. Focus on the total dollars you want to invest and not the number of coins you want to buy. Also, always remember, never invest more than you can afford to lose. It is recommended to hold no more than 2% of your overall portfolio in any one crypto in order to limit crypto-specific risks. Step 5. Manage your investments. Cryptocurrency is a unique investment because it can be used to buy things and can also be held as a long-term investment. How you manage your crypto holdings depends on your investing strategy and goals. You may wish to consider applying the stash way, a philosophy focused on regular investing, diversification, and investing for the long term. Way to go, guys! Great job sticking around. Last but not least, let's talk about some cryptocurrency investing frequently asked questions. What do I need to know before buying cryptocurrency? Cryptocurrency is a risky investment, so approach it with your eyes open to potential pitfalls. Digital currency is volatile, it's largely unregulated, and there are many unknowns about how this new form of currency will develop in the future. What to look for in a cryptocurrency to investment? Every cryptocurrency is different, so the best option depends on your individual circumstances. That said, beginning investors may wish to explore more established currencies, as there is plenty of information about how they work and their performance over time.